In this video, I'll explain the difference between a market order and a limit order and why you might want to use one order type over the other. And then at the end, I'll share my opinion as to what I feel is the best option. So a market order will be executed immediately. As soon as you hit the buy or sell button, your order will be filled at the market price. Whereas a limit order is only going to be executed when the stock hits the price that you specifically set, which is typically going to be lower than the current trading price or higher than the current trading price in the scenario that you're selling shares. A limit order could be filled within seconds, minutes, hours, days, or never, depending on the limit that you set and the market conditions. So, why would you use one order type over the other? Well, there's a few scenarios where a limit order might be the only option. For example, if you want to buy or sell stock in the pre-market or after hours, then a limit order is the only way to do so. Also, if you're only willing to buy or sell a stock at a specific price, which is lower or higher than the current market price, then a limit order is the only way to guarantee that. Lastly, if you can't be in front of your computer all day but still want to take advantage of buying or selling stock at a key level of support or resistance, then again, a limit order is really the only option. So let me give you a couple quick examples of what I'm talking about. All right, so on my screen right now, I have Pinterest stock pulled up, and here in the gray areas, you have aftermarket hours and pre-market hours. So if you're not aware, you can actually purchase stock before the market opens and after the market closes. And as you can see here, I'm actually looking to purchase some shares of Pinterest in the pre-market. So it's currently 8:52 and the market is not open yet. And I want to buy some shares before the market opens. So you can see here, I actually have a limit order set and I've only been partially filled. But again, you can only buy shares in the pre-market or after hours with a limit order. Also, one thing to consider when you're trading in pre-market or after hours is the trading hours has to be set to include extended hours. Okay, so you can see down here, you have an option for include extended hours or only regular hours. You have to make sure that is include extended hours. So the second example is going to be selling at a key level of resistance, and you're also not going to be around to do so. For example, let's say I want to sell Pinterest stock once it reaches 32.50. You can see here, previously it reaches this area of resistance and it gets rejected. Okay, patterns tend to repeat themselves, but they don't always have to. Let's say I want to sell if this stock reaches 32.50. So I'd go over here to sell. A limit order quantity 38 because that's all I own right now, and the limit price would be 32.50, and then I would go ahead and hit sell, and you can see my limit order is now placed at 32.50. So when Pinterest reaches 32.50, my shares will be automatically sold and I don't have to be in front of my computer to make this happen. The same goes if you want to buy stock at a level of support, kind of like I'm doing here in pre-market, right? You can see this is a level that it recently has been bouncing off of. You would just set your limit order and wait for it to be filled. Again, you don't have to be around. On the other hand, when it comes to a market order, there's really no scenario where you must use one. However, there are some examples where it might be beneficial or maybe just easier to use one. For example, when you're trading a stock that's moving up or down really fast. So let me give you a quick example of what I'm talking about. So currently I have SoundHound pulled up. You can see here that I have the minute chart pulled up right now. And when the stock market opens up within 3 or 4 minutes, it drops down 2-3% and then rips up about 3.5%. Okay. So this is all moving very quickly. And let's just say that I wanted to take advantage of this little dip in the beginning because I was anticipating a big move like it had. If I used a limit order, by the time that I go and place my limit order here and submit it, okay, so I gotta go over here, hit limit, choose my quantity, choose my price, and then hit submit. Well, the stock's probably already made its move up. If you want to try to chase it, then you gotta go back over here and you gotta change your limit order. There is the scenario where you have your limit order right here, let's say, and with some platforms, you can just move it up like that. So that obviously makes it easier. But even then, let's say I'm chasing it up and I'm like, okay, I'm gonna put it right here. And when the stock pulls back a little bit, I'll get in then. Well, guess what? It never does. And then you can just keep chasing it up. And then now you're questioning yourself if, it's even worth getting in. So again, using a market order in this scenario, if you have a market order checked, you can see there's no price to pick because you're just going to get filled at the market price. It may not be the best fill, meaning, you might not get filled at the current price. It might be a little bit higher, obviously, if a stock's moving quickly, but at least you're getting in, you're in. And at the end of the day, you're looking for the bigger move, which is in this case, 8%. So that's an example. And then the same goes for a stock that's moving down really fast. If you're looking to get out of a stock, it could be risky setting a limit order up here and, hoping it gets filled. And then what happens? The stock just starts crashing to where if you just want to get out and you don't really care the exact price that you're selling for, you're just ready to take your profits, then a market order might be best for a stock like this because, again, it's moving so fast. And if you take your time with the limit order, you risk not getting filled. And then you can see here, as the stock starts dropping, it never bounces, and you quickly lose all your profits and more. So that's the risk that you take using a limit order with a scenario like this. Now, with that being said, a market order should only be used on stocks that have a lot of volume. That's because typically when you use a market order, you're gonna get filled closer to the asking price. So let me show you a quick example of what I'm talking about. Right here, I have a penny stock pulled up, ticker symbol GNLX. And if you look over here, you can see the bid and the ask. So we're in pre-market right now. This is a good example nonetheless. You can see the bid price is $247 while the ask price is $278. So if I were to place a market order in this scenario, I'm going to get filled closer to $278, okay? And you can see here in pre-market, the stock's currently trading at $264. So what is that? That's a 14-cent difference. That might not seem like a lot, but again, if you're buying, let's say 10,000 shares, that adds up. Vice versa, let's say I own shares and I want to sell them using a market order, they're going to sell me at $247. And again, the stock is currently trading in pre-market at $264. So you can see the big difference there. By using a market order, you might be losing a lot of money and not even realizing it. And let's say you're taking a position, for a day trade and the spread is big like this. I mean, I've seen it even higher, 50 cents, 60 cents, even $1 in some scenarios. You could be down on your position immediately. So that's why it's important when you're using a market order that you're only trading a stock with high volume. So I can just go over and show you another example real quick. Let's go to Apple stock. You can see here that the spread on this stock is 5 cents right now, okay? Mind you, Apple trades at $236, so 5 cents on this stock is nothing. And that's a good example of, using a market order on a stock like this. You're not really losing anything when you're buying and selling, and it's going to be safe using a market order in this scenario. In contrast, if you were to use a limit order in this scenario, typically a stock with the big spread, you're going to get filled somewhere in the middle. So which is the best option? Well, in my opinion, and for my trading style, I believe a limit order gets the win here. You can set the price that you're willing to pay. You don't have to be sitting in front of your computer to make the trade happen. And it's better for stocks with bigger spreads or high volatility. Not to mention, it's the only way that you can make a trade in pre-market and aftermarket hours. At the end of the day, it's just the safer option in most scenarios. With that said, there are times that a market order can come in handy and may be in your best interest to use. That's all I have for this one. I hope you found this video helpful, and I'll see you in the next one.